Welcome back to the swing trading breakdown for week 22. In this video, we'll analyze the best catalyst-based swing opportunities, break down the catalysts behind them, and ask the key question, were they tradable? And if so, how you could have traded them. If you're new here, I'm documenting my trading journey, focusing on catalyst-based day trading and catalyst-based swing trading, and I'm developing an edge around news and the catalysts that spark explosive stock moves. So if you want to develop your own edge, make sure to subscribe and hit the notification bell. The first stock we're going to look at is NVTS, which is a semiconductor stock that had the news on the 22nd of May, well, actually on the 21st post-market at 4:17 p.m. and the news was related to NVIDIA. So the headline here says that NVIDIA selected Navitas, which is NVTS, to collaborate on next generation 800V HVDC architecture. And that news sparked an explosive move post-market. Let's look into the details of the news. So the news here says that Navitas Semiconductor, which is actually a recent company. The company was founded in 2020, but it's already an industry leader in next generation GaN fast gallium nitride, so GaN, and genetic silicon power semiconductors, which is essentially semiconductors. Today announces a collaboration with NVIDIA on their next generation 800V HVDC architecture to support Kyber rack scale systems powering their GPUs, such as Rubin Ultra, and enabled by GNF Fast and Genetic Power technologies, which are the semiconductors that this company is developing. NVIDIA next generation of 800V DC architecture aims to establish high efficiency, scalable power delivery for next generation AI workloads to ensure greater reliability, efficiency, and reduced infrastructure complexity. Okay, already the news is actually very positive, very good for NVTS, because it is a collaboration. First of all, it is a very hot market, the semiconductors. It is also related to AI, and it is a collaboration with, this is a pretty small company collaborating with the market leader, which is NVIDIA. So from that itself, it's a very, very good news. Excuse me. Now, let's look into just more detail to see if there is something else. Today's existing data center architecture uses traditional 54 volts in rack power. Distribution is limited to a few hundred kilowatts. So this is the technicalities of the existing infrastructure and how maybe this collaboration could dramatically improve this. The modern AI data center require gigawatts of power for the increasing demands of AI computation, of course. NVIDIA's approach is to directly convert the 13.8 kV AC grid power to 800V HVDC at the data center parameter using solid-state transformers and industrial-grade rectifiers, etc., etc. Due to higher voltage level, thickness of copper, etc. So this is really the technicality of why they are entering into this particular collaboration with Navitas. So Navitas is an established leader in AI data center solutions enabled by GaN and SiC technology. The high power, etc., integrates control, drive, sensing, and critical protection features, enabling unprecedented reliability and robustness. So it's very, very, very good. They have very good technology, essentially. GaNSafe is the world's safest GaN with short circuit protection, eliminating negative gate drive. Additionally, Navitas offer a family of medium voltage, other things enabled by 20 years of SEC innovation leadership, offering technology. And anyways, the rest of it is really the technicality, the engineering of this particular technology that Navitas has, and why NVIDIA was interested essentially in collaborating with Navitas. So incredibly good news, understandably, and it actually sparked an incredible reaction for that stock in the stock market. So let's look at the chart now. Okay, so we're looking at the NVTS charts. The daily chart is here, the 1 minute, the 2 minute chart actually is the one above. And as you can see, on the day of the news, which was the 22nd of May, the stock jumped post-market. We can actually see it here. Stock just went from nearly $2 all the way to $6.30. So that's a move of nearly 230%. That was post-market. And it did spend sort of the rest of the post-market session as well as the next day session of the pre-market and during the normal session, sort of giving up some of that gain. So from the peak of the post-market session, 642, all the way down to $4. And so what happened here essentially is that because of how good the news was, there was an overreaction of the market, and there is a huge gap up basically. So the stock here at the open of which is the 22nd, the stock had a huge gap from, if we look here, from $2, it opened at nearly $5. And so what happens usually is when you have such a good news, but when you have such a gap on the news, it's not, sometimes that does happen that it is tradable, it can go higher because the news is really is perceived by the market as incredible news, and maybe the stock was a neglected stock, it didn't have much attraction for the stock before, and so it can lead to a 400%, 500% move. So those 200% post-market session move could have been like going even higher during the session of the next day. But a lot of the time, 200% is a pretty extended move. Therefore, on the next day, the stock just ends up giving up the gains or going sideways or not doing much. That's because whoever was interested in actually acquiring the stock just did not feel comfortable or didn't see it as a good entry point to buy the stock with such a huge gap up. And so a lot of the time I've seen this. You'd have this sort of strange gap up on the day of the news. Then the next day, you'd be giving up again some of the gains. And a few days later, you'd actually have the real move, which is what happened on the 27th of May, the Tuesday 27th here, where the real swing started. And so here, the stock opened at 455.54 and then went all the way to 750 and then give up some of the gains. So a lot of the time in normal market conditions, you'd have this reaction that happens a few days later. Essentially, some either hedge funds or other types of funds looking to enter the stock to get a position in the stock would be waiting for the gap to kind of not even close, but just to kind of give up some of the gains, and then they'd be looking to enter a few days later. And usually that entry marks the start of a few days swing. So a swing that would be 3 to 5 days where the stock would be going up, say from this day here would be going up again, up a little bit, 3 to 5 days move starting from the day the real move started. But it seems that in the current market conditions, with a lot of uncertainty around tariffs and policy and the bond market and just the volatility of the current market makes it that maybe those moves are fading away much quicker. And so the usual 3 to 5 day swing ends up being like either a 2-day swing or even a 1-day swing, which is not really a swing. It was just a day trade essentially. But anyways, so this is really what happened. But in theory, when you see a stock that has such a great move, that has a gap, a big gap on the day of the news, and then giving up some of the gains of that gap, and then starting another breakout a few days later, which we would call the delayed reaction on that particular stock. Usually that's the start of a 3 to 5 day swing in normal market conditions. Anyway, so what happened with this NVTS is that, as I said, on the 27th, here we're looking at the intraday chart, you can see that the stock broke out on that day, made an incredible move of 60%, gave up some of that gains and kind of continued the session sideways. This is where when you know the history of the stock, few days before had a great news, and you see huge volume coming into the stock right off the gate at the open, the stock going up, that's when you enter somewhere here in the first few minutes, of course, if you can, and if you're watching the stock, and then you capture this move. And of course, under the market conditions, the current market conditions, I mean, usually you'd want to be taking when you make, say, 50% return on your investment, you'd want to be taking some of that profit off the table. So maybe dependent on each person's preference and strategy, you could be taking off 50% of the position, or you could be more aggressive if you really don't feel comfortable keeping the position open. You can be taking 70%, 80% of the position and leaving 20% with a reasonably wide stop to potentially capture if there was, because I mean, there was no guarantee that the stock was gonna give up the gains and kind of go a little bit down the next few days. It could have continued much higher, right? Because the news is really good, but it's a personal preference. It's based on your risk appetite. Here, what happened in particular is that the stock gave up some of the gains of the highs of the day. 766 was the high of the day, then went down to 650, and then continued giving up the gains for the next 3 days, but not so much. I mean, it went down all the way to $5, and then there was another breakout on the day of the 2nd of June. How much was that? 8. And that could potentially be the start of a swing. Potentially, it could work, but it's no longer, I would say, it's no longer sparked by that particular catalyst, but it could be. Okay, so next stock we're going to look into is SBET, which is a gambling stock, in particular a sports betting related stock. I made a video on this stock on the day of the news, which was, I think, 27th of May, because it was a huge day trading opportunity pre-market. And so, but it actually was also a very good swing trading opportunity. So anyways, let's look at the news just to refresh. But if you want to look into the news in more details, I will be linking the day trading video of SBET, where I dissect and go into the details of that news. But anyway, so the news was, so on the 27th of May, the news was that Sharpling Gaming, which is the SBET, announces the nearly $500 million, so $425 million private placement to initiate Ethereum Treasury strategy. So that's a cryptocurrency Treasury news. Very bullish for the current market. Anything that's related to cryptocurrency, in particular Treasury, is very bullish. And so what happened was that the stock took off from the moment the news was out about this Ethereum Treasury news, and made a move, including the regular market session, of nearly 374%. And so this particular move here, even just accounting for the pre-market session, but also the market open, was a very good day trading opportunity on that particular day, which was not the same thing as for the previous stock that we looked into, which was NVTS, that because the news for NVTS was out post-market the day before. So if you're trading post-market, you could have traded that, but even I think the move was so dramatic very quickly that it's very difficult to actually trade this. But here SBET was tradable as a day trade on the day of the news. It was out on that day at around 7 or 8 or something like that in the morning. You could have traded this leg here. You could have traded the continuation into the regular market session, and then it started giving up some of the gains from the market peak here, 52, all the way to 32. Kind of continued giving, just sideways from there. So if we look at the daily chart here, what we see is we see a huge volume, and we see a gap up from $4 to $34. That's a huge gap. So obviously it's the same logic there. Anyone who wanted to get into the stock would be thinking that's a big gap to take a position. That's not a very good entry. So it's a very good day, at least it was on that day, a very good day trading opportunity, but not so much as a swing opportunity. So the same logic, you'll have to wait a few days for a delayed reaction to see if this news will spark a swing opportunity for the funds, hedge funds, or even retail traders looking to get into this stock. And so this is what happened. So the first day of the move just ended up giving back the gains. Next day, very low volume, red candle, also not very interesting. But on the third day, so 29th, Thursday, that's when you have the start of the swing. So you have a breakout here. Let's look at the intraday chart, and you can see the breakout happened on this day right off the gate. At the open here, you can see good volume, the stock going up, then kind of going a bit sideways, and you could have entered anywhere here knowing that just 2 days ago the stock had an incredible news. And so this was the start of the swing. From $30 all the way to the market, the day high, which was $90. And so again, under the current market conditions, if you are a bit conservative, you could be taking off, depending on when you enter the stock, of course, you could be taking off 50% of your gains, locking on some gains, or you could be taking a bit less if you want to be aggressive in terms of, because you have a bullish view on the stock or the market. You could be taking off just maybe 20% and letting the rest run, or the other way around. You could have been very aggressive in terms of taking profit, so you could have taken out 80% of your position and leaving 20% to run to see if it could go higher, which is actually what happened with this stock, unlike for NVTS. So the stock here on the for the post-market session goes up a little bit, goes up all the way to $100, then give up some of the gains, goes down. It's like, you have to be comfortable with with volatility here. So from $106 going down in the same post-market session to $70, and then regaining some of that on the next day pre-market session from $90, again going all the way, breaking the previous day market high, $120. And so, yes, you could have taken out then maybe the rest of your position here during those pre-market sessions. It would have been actually a better move to do this, because then it just ended up giving up the gains during the regular market session. So opened around 115 and closed at around $77. Again, this is, in my view, due to market conditions. The current market conditions are such that there's so much uncertainty that people are just taking profit very quickly and not letting the swing actually go and behave like how it should behave under normal market conditions, which usually would last 3 to 5 days, even 2 days. Even 2 days a swing is actually good. In this case, the 2 days was really a day and a half, because the swing continued all the way to the pre-market session of the next day. So some people who would have kept a position, an open position on the stock, would have capitalized on that. But then it gave up the gains on the actual, on the regular market session. And so all of this is due to current market conditions, in my view. And I'm hoping that when the market conditions improve, I can show you some examples of actual delayed reactions that, you know, with swings that last more than 1 day or 2 days, or like, you know, something more normal that is 3 to 5 days. Now, last stock we're going to look at today for this swing trading video is LVWR, which is a auto manufacturer. Had absolutely no news, no catalyst for that particular move. But unless you consider, I mean, a month-old news a catalyst, I actually don't believe it's related to that particular news, which was financial results. I do believe this this swing that we're going to look into today was sparked by the actual activity of the stock of the company, auto related in the current environment, with the tariffs and all that. And it's more so the behavior of the stock that makes it a good swing. So let's look into this. What happened was that the stock had a breakout from a long base. This is the daily chart, and as you can see, the stock was going like for a very long time, actually going kind of down and sideways from, you know, $4 here, now $2, then going down even further down, $1, even below $1, and just going sideways on very low volume and very tight action. And so it breaks out of that base on very big volume, 82 million volume on that day, so on the 27th, and moving the stock from $1 all the way to $2.5, so a move of 153%. Okay, and so when you see something like this, now let's look at the intraday. So here's what happened actually. So during the day, so at around 10:30 in the morning, the stock start you know, going higher and then higher and then sideways, and then the post-market session also had this crazy move from $2 to 2.3 to $4.4. And so when you see a stock that was sort of neglected, just out of a sudden having some huge volume, even on no particular catalyst, the volume itself, the fact there is so much volume coming in, is the catalyst. Because there is no way a stock is attracting so many buyers. Who are these buyers, by the way? Probably some funds, big institutions getting into the stock for whatever reason. This is the catalyst itself, if there is no other catalyst. And I actually think this is related to this particular sector and this particular theme in the current market environment. And so this can be considered, I mean, it's a bit more risky for my trading style. That I like to see a particular catalyst, but because, I mean, the stock is a small cap, you know, you could have taken the risk of actually engaging in that particular swing. And so anyways, you can see that this on the day there was a huge volume. The next day, same, very, very big volume, 70 million traded in that particular stock. Then the following day, a bit of a red candle, giving up some of the gains, coming down from 460 all the way to kind of 270, and then another Another green day, Friday 30th of May, with huge volume again, 63. This stock never traded this kind of volume, by the way. And so 63 million again, taking the stock from $30 all the way to $5. And so this is a swing of 500%, right? So it is a very good swing, actually, very good opportunity. And the only thing that could have indicated that this was gonna potentially happen for this particular stock is the volume, the fact that there was such a big volume. There is just no way such volume would be interested in a stock if there was no particular reason behind it. Somebody knows something, somebody has some information, an edge over that particular stock, and so that's why buying came in. So when you see this, when you see volume, but there is no catalyst, it may not be a good day trading opportunity because you really don't know what's going on, but it could be you could take a position and take a chance with a reasonable stop and take a position, a multi-day position. And by the way, this one, which didn't have the catalyst, actually, because you see, it didn't have any gap up on the day of the on the first day of the swing, because there was no catalyst, there was no gap up. Therefore, the swing lasted a few days. In fact, it lasted 4 days here, unlike for SBET and NVTS, which actually lasted even just a day and a half, 2 days, because it did have this huge gap up on the, you know, on the news as a reaction, immediate reaction to the news. And so I think this week 22 has offered some interesting and different types of swing trading opportunities, some based on catalysts, some like this one here, LVWR, not based on particular, you know, news catalyst, but more so on the volume and the behavior. The other ones were actually delayed reactions, and they weren't really also starting on the day of the news. So anyways, I hope this was interesting for you guys. If you liked the video, please, as always, share, like, subscribe to the channel if you enjoy my videos, and thanks for watching.